Hey Sally, did you see the market today? It's getting killed.
Ha 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 ha, you said? Market.
What's so funny about saying market?
A market is a place where goods and services are exchanged for relatively equal benefits.
Are you okay, Sally?
Ha 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 ha. Yes, I'm fine. I just used to be a trader, that's all.
I didn't know that. So you follow the MKT?
Yes, I do. I'm gonna let you in on a little secret. But you gotta promise not to tell anyone, okay?
You're a lesbian.
You're hilarious. The market is not a market anymore. It's a great big algorithmic program that is run by supercomputers that have predatory programs that seek out orders to trade in front of and effectively bully prices up or down as they see fit.
UHHHMMMM. Okay, but what does that mean in English?
There are a lot of ways they go about their daily routine. One of my favorites is what they call quote stuffing. A supercomputer program is placed in between orders to buy and sell stock and the exchange it is headed for. That program sees where and what the order is for. For example, let's say it's an order to buy 3,000 GE. The program then sends thousands of orders within a fraction of a second to the bid of GE. They cancel any sell orders they have. They continue to overload the stock bid with thousands upon thousands of orders to buy, giving a false sense of extreme bids on the stock. They cancel every single order within the same fraction of a second so they never have to take possession of that stock. They then buy GE for a fraction of a penny lower than you and look to sell their shares to you to make that tiny profit.
That sounds complex, but it's only for a fraction of a penny. No one really seems to be getting hurt.
You are missing the point. What do you do here again?
I staple things together.
Okay, let me break this down for you. They purposely manipulate the bid or offer of stocks to create an illusion. Sending out 10,000 buy orders and canceling those same exact orders within a fraction of a second is not a strategy. It's a tactic. It's intentional. It's malicious. That hurts the market. That's not a level playing field.
So if that is true, doesn't someone know about it? Shouldn't they be able to stop that pretty easily? That definitely seems a little sketchy.
The SEC knows exactly what is going on. So do the exchanges. The problem is they both are getting fees from these HFT programs.
What does that mean?
The SEC charges transaction fees that amount to fractions of a penny for numerous types of orders. The exchanges also charge fees for those that take or create liquidity. Those that take liquidity have to pay a fee. Those that create are paid a sum of money. They are being paid enormous amounts of money for just about every transaction that takes place every day of the week. They have little economic reason to stop charging these fees.
Okay, you are losing me. Why does the SEC get money for a trade?
Because you are wearing your wife's pink shirt.
Ha 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 ha. You're hilarious. But really, why do they?
It gets pretty complicated. The bottom line is, they surely shouldn't. Nowhere in their mandate does it say that they are a for-profit entity that is entitled to monetary gains from the trading of individual stocks. At least nowhere that I know of. It's all very disturbing to me.
That sounds extremely disturbing to think they are getting a piece of every trade that goes by. Even if it is only a fraction of a penny, the markets trade roughly 8 billion shares a day. That adds up to serious money. Maybe we could do the same thing somehow. Provide liquidity and get paid for it.
Not likely, Brad. We are not an exchange. Even if we made marklets and stokes, if we didn't have a server in between the orders and the exchanges, we would have no idea of what was going to hit the tape like they do.
Huh?
When they see the orders, they know if they are buys or sells. They also have an accumulative program that adds up all orders that come from different places. For example, if you knew a day trading firm had $20 million short overnight, it would probably be relatively easy to bully those traders out of their positions. You know positively that $20 million of buying has to come from that firm, most likely within the first 2 hours of trading. That's typically how most day trading firms act. If you could buy a bunch of futures pre-market when there is very little volume, then quote stuff the stocks that you know they're in for the first half hour, There is a very good chance that those traders are going to be forced out of their trades to control their losses.
That sounds like they're purposely trying to manipulate the prices higher so they can force the hands of the overnighters. Is that illegal?
Not necessarily. The problem lies with the exchanges and the SEC for allowing these servers in between the orders and exchanges. They are the reason this incredibly valuable information is being broadcast to the highest bidder.
So who's the highest bidder?
Pretty sure that would be Goldman Sachs. But anyone a couple of $100,000 a month can buy a server spot.
And nothing is done about this. That's lovely. I see why you mock the word market.
Lighten up, Bradley. It's not like you have any money in the market anyways.
You say hurtful things.
Ha 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 ha. You're a nice boy,